Hello everyone. Today I'd like to share 7 penny stocks with massive growth potential. So the first stock on the list is Biolase Inc. With a move to new 52-week highs a few days ago, Biolase stock is on our radar. To date, Biolase has sold over 41,000 laser systems in more than 80 countries throughout the world. While BIOL stock was adversely affected by the pandemic, it is working to recover in a big way. The company states that dental procedures are occurring at around 80% of their pre-COVID levels. This means more demand for its products and a potential return to normalcy for its business model. On January 26, Biolase posted its preliminary fourth quarter 2020 financial results for the period ending on December 31. In the results, the company expects a 26% revenue growth range over the previous quarter. Also, the company stated that almost 80% of total sales came from new users. This means that Biolase is working hard to ensure that its products are being distributed around the world. Todd Norb, CEO of Biolase, stated that, "Our preliminary fourth quarter revenue, which now represents 2 consecutive quarters of meaningful improvement, is being driven by sales to new customers, specialists and DSOs in the US as they seek safer and advanced alternatives to grow their practices while ensuring their patients are being cared for." The next stock on the list is Seneca Biopharma Inc. Shares of Seneca Biopharma continued along with their multi-week uptrend on Thursday. The penny stock had an uneventful year in 2020. But at the beginning of December, shares began making a move. Since then, SNCA stock has managed to climb from around 70 cents to highs this week of $1.69. What triggered this move? Merger news between Seneca and leading biosciences helped spark some bullish sentiment in the market. The combination will form a company focused on advancing lettings LB1148. This is the company's lead drug candidate for restoring normal GI function after surgery. It's also being studied for its potential to reduce certain post-op complications. In an update, earlier this month, leading biosciences announced that the FDA granted Fast Track designation to LB1148. This facilitates the development and expedites the review of the drug. With the merger expected to close in the first half of 2021, eyes are on any signs of a definitive headline. The third stock on the list is Soligenix Inc. Upcoming events can be a cause for speculation in certain stocks. This could be what we see with Soligenix right now. This month, the company announced it would host an investor webcast event on Tuesday, January 26. Leading up to that presentation, SNGX stock began climbing. The only thing to put a pause on that move was a sell-off following news that Soligenix was going to raise money. The company is planning a commercial launch of its SGX-301 in the treatment of cutaneous T-cell lymphoma. Soligenix recently completed pivotal Phase 3 fluorescent light-activated synthetic hypericin trial of SGX-301. Data showed a statistically significant treatment response rate in the primary endpoint after just 6 weeks of therapy compared to placebo. This positive treatment response continued to improve with extended SGX-301 treatment in its open-label treatment cycles after 12 weeks and 18 weeks. Based on this, the company has stated that it believes the treatment, supported by trial data, represents significant near-term commercial opportunities. With this on the table, traders have grown bullish on the stock. Will it remain the case this quarter? The next stock on the list is SOS Limited. Another big gainer of the day was SOS stock, climbing roughly 27% by EOD. As of Friday, shares sit at a comfortable $3.04, which is more than double what it was at the end of 2020. The company works through its subsidiaries, providing high-tech services in the data and emergency services market. Also, it works in the IoT, blockchain, and artificial intelligence markets. As you can see, SOS Limited is quite a broad company in its operations. And while many big daily gains go without news, SOS made an exciting announcement on January 29. During trading, the company stated that it had completed the initial steps of its blockchain strategy. This includes the successful development of cutting-edge biological info storage systems, firewall systems, antivirus, and AI. The chairman of SOS, Yandai Wang, stated that, "R&D is our lifeblood and our growth engine. We anticipate investing 15% of our revenue in R&D and the annual growth of R&D budget to be over 10% in each of the next 5 years." The company also stated that it had established a new subsidiary, known as Qingdao SOS Digital Technologies Inc. This group will focus on researching cryptocurrency to find new ways to utilize it in its business. As a tech company with hands in many industries, SOS could be a penny stock to watch next week. The next stock on the list is Iconix Brand Group Inc. One of the larger gainers of the day on January 29 was Iconix Brand Group Inc. BIOD shares had jumped by roughly 67%, closing at $2.85 per share. Since the beginning of January, the brand management company's shares have more than doubled to its current price. While you may not have heard of Iconix, the company licenses brands to retailers and manufacturers across the apparel industry. It holds the rights to brands that can be bought in stores like Kmart, Sears, Target, and others. Its brands include Joe Boxer, Buffalo, and more. While a pandemic may seem like the wrong time to invest in an in-person clothing retailer, the company has shown high demand during this time. In its third quarter report posted on November 16, the company showed adjusted EBITDA of almost $14 million. While this is around $7 million less than the same quarter of the previous year, this can be attributed to the pandemic. Despite this, the company still posted revenue of roughly $24.5 million with a GAAP operating income of $66.4 million. The latter is quite important as it represents a massive jump from the $8 million loss it took in the same quarter of 2019. Bob Galvin, CEO of Iconix, stated that, "As we continue to navigate through the pandemic and the resulting economic conditions, the well-being of our employees, licensees, and communities remains at the forefront. Despite coronavirus, we continued to expand our business, including a successful launch of Umbro products in Walmart." The next stock on the list is Rigel Pharmaceuticals Inc. Rigel Pharmaceuticals Inc. is a biotech company that develops novel treatments for cancer and rare diseases. Also, the company works on hematologic disorders, where it holds several drugs currently in trials. In its pipeline, Rigel Pharmaceuticals has a large range of compounds, including fostamatinib, which is in a phase 3 trial to treat autoimmune hemolytic anemia. More recently, the company has been working on the use of this drug to treat COVID-19. On Friday, a big announcement was made stating that Rigel had received roughly $16.5 million from the U.S. Department of Defense. The goal of this deal is to support the phase 3 trial of fostamatinib in hospitalized coronavirus patients. Currently, this drug is known in the U.S. as Tavalisse and is approved domestically and in Canada and Europe. On January 29, Raul Rodriguez, CEO of Rigel, stated that, "We are grateful to receive this funding from the DoD and for their demonstrated commitment towards finding safe and effective treatments for COVID-19 patients. These additional resources will contribute significantly to the advancement of our Phase 3 trial." With this information in mind, Rigel could be an important part of the COVID biotech industry moving forward. But, investors should also consider the long term for Rigel stock. Whether or not this makes Rigel worth watching is up to you. The next stock on the list is Phunware Inc. Phunware is another company that posted major gains on Friday. During trading and into after hours, shares of PHUN stock jumped by roughly 56%, ending the day at $2.08. PHUN stock has shown a lot of bullish momentum during that time, which has helped make it quite popular in the penny stock world. Also, Phunware has a relatively unique business model. The company provides multiscreen as a service products across a large cloud platform. This allows its customers to engage in data licensing, transactions, location-based services, marketing automation, and more. Again, Phunware is quite a broad company working within the MOS industry. As a tech and software business, Phunware has seen increased attention due to the pandemic. With coronavirus on the rise, business automation software has become ever more popular. While Phunware stock is highly speculative, it could be a penny stock to watch. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.